If you woke up today thinking, I hope the economic roller coaster goes for another loop-de-loop, then you've come to the right place. Welcome back to the comment section with Thomas Paul, the channel where we look at the latest market madness and wonder, should we laugh, cry, or both? And guess what? Donald Trump just made a speech that might accelerate a new wave of tariffs. We've got fresh data hinting at a possible recession. And somehow Tesla's numbers in Germany are tanking, like a soggy pretzel left in the rain. Intrigued yet? Let's dive in. But wait, it gets even wilder. The ADP report, that so-called private sector job barometer, came in at only 77,000 new jobs instead of the 164,000 expected. Apparently, employers are about as thrilled to hire right now as we are to pay for overpriced avocado toast. Consumer spending seems to be limping along, maybe because Americans are exhausted from hearing the word tariff every 5 seconds. And if small businesses are the canary in the economic coal mine, well, that little bird is having a coughing fit. Not a great sign. Then there's the talk of policy uncertainty, a phrase economists use when they suspect politicians are playing a twisted game of ping pong with the economy. Because apparently, the fastest way to fix everything is to keep us in perpetual suspense. Will we or won't we get hammered with more tariffs next week? Stay tuned to find out. It's like a bad soap opera, except it's your wallet on the line. And here's where things get interesting, because if you recall, Donald Trump has been pushing a robust tariff strategy that, in his view, might cause a little hiccup. But hey, no biggie. Because small economic hiccups never escalate into full-blown financial migraines, right? If you believe that, I have some farmland in Antarctica to sell you. But let's talk specifics, because I know you want the real data. Recession forecasts are all over the place, and not in a comforting, throw pillows on a couch kind of way. BCA Research just raised their 12-month recession odds to a whopping 75%, which basically means they're about as bullish as a vegan in a steakhouse. They're pointing at stuff like bond yields, GDP growth, and of course, Trump's brand new love affair with trade wars as reasons to break out the doom and gloom confetti. And you know what the scariest part is? They might be right, because if there's one thing the economy hates more than pineapple on pizza, it's uncertainty. The moment the White House says tariffs, markets start to panic, like they just heard the ice cream machine at McDonald's is broken. Then we get retaliation from every corner of the globe, Canada, Mexico, the European Union, like a global game of, oh, you tax me, I tax you back, leading to precisely the scenario that sets big industries and tiny mom-and-pop shops on edge. It's exhausting. But wait, it gets wilder. Some folks believe Trump might actually want a mild recession, or at least wouldn't mind if one shows up, because it could crush inflation, weaken the dollar, and drop interest rates. That, in theory, would prime the economy for a big revival. The problem is that recessions can be about as predictable as a raccoon on Red Bull. They don't always stay mild, and if you're an incumbent or a politician hoping to spin the blame onto your predecessor or your rival, you'd better hope the pain is short-lived. Because once you crash an economy, it's not exactly the best time to campaign for re-election. The voters tend to hold grudges. Just a minor detail. Of course, the job market is our canary in this muddy coal mine. ADP's chief economist basically said, look folks, this hiring slowdown might just be the start, especially with consumer spending taking a breather. And it's not just the big corporations feeling the pinch. Small businesses, which usually run on razor-thin margins, are also pulling back. That's the real worry, because when the little guys start hurting, we're one big wave from going full financial tsunami. Next up, let's talk about Tesla's wacky new numbers in Germany. According to fresh data, Tesla's figures there sank by 76%, which is about as dramatic as it gets without fireworks. If you're one of those Elon Musk fans who sleeps in Tesla pajamas, this might be your cue to start biting your nails. Speculation is swirling. Is it the economy? Is it competition from local car makers? Or is it the political baggage that Musk has been dragging around? Maybe it's all of the above. And let's not forget, in a country famous for its automaking prowess, your fancy EV better be perfect, because local fans can easily switch to a made-in-Germany alternative faster than you can say lederhosen. You won't believe what happens next. Now that Trump's in office again, with a friendly wink to those who see him as orchestrating the next grand plan, the White House is doubling down on these tariffs with the logic of they tariff us, we tariff them. In practice, that's like two toddlers fighting in a sandbox, and each complaining the other through the first handful of sand. Will it help? Maybe, eventually. But in the short run, it's basically more chaos. If you were hoping for stability in trade policy, I'm sorry to disappoint. So keep your seatbelt on, the coaster ride is far from over. And that leads us to Canada. Yes, our friendly neighbors up north are apparently so done with American politics that in some places folks are removing American products from shelves, scowling at Jack Daniels, and slapping little Canadian flags on homegrown alternatives. If you think that's just performative drama, let me assure you, it has real economic impact. Consumer boycotts, big or small, chip away at cross-border trade and fuel even more bitterness. And if that bitterness escalates, we could see new taxes or more complicated rules at border crossings. Perfect. Just when we needed more ways to slow down supply chains. But wait, it gets even wilder. This trade war might ramp up to its highest level of tariffs since World War II. Yeah, let that sink in. Instead of building stronger alliances and freer trade, we're apparently printing more tariff announcements than you can wave a protest sign at. Some people are calling it a strategy to spur domestic investment. Others think it's a political stunt to rally certain voter bases. Either way, if you think you've seen peak trade drama, think again. We may be about to break out the popcorn for the next giant spat over cars, pharmaceuticals, agricultural goods. You name it, it's on the tariff table. Of course, a stable economy could handle some level of trade friction, but in an environment with rising layoffs, cautious employers, and folks who might already be strapped for cash, it's like tossing dynamite onto a campfire. Maybe it won't explode, but maybe it will. Which do you think is more likely? Exactly. Meanwhile abroad, China is trying to look calm, collected, and open for business. They've set a 2% inflation target, a 5% GDP target, and are basically saying, hey, world, invest here. We'll keep our drama to a minimum. They're lowering down payment requirements for home buyers, rolling out incentives for local municipalities to scoop up unsold properties, and basically firing up the growth engine. That's brilliant if you're Beijing, because while America tangles itself in tariff mania, China can cut deals, forge new economic friendships, and quietly pick up global influence. That's a sneaky move, and possibly a game changer if the US fails to notice. And here's where things get interesting. We might be heading for a budget showdown in Congress too, because clearly we didn't have enough chaos. There's talk of a potential government shutdown on March 14th if Congress can't find 60 votes for a new funding bill. Democrats have their demands, Republicans have theirs, and the middle ground is basically that awkward silence at the family dinner table when nobody wants to talk about Uncle Joe's weird political rant. The result? More uncertainty, more risk that some federal services go offline, more reason for markets to freak out. Yay. Then there's the Trump speech fiasco itself. We've apparently never seen so many protest signs inside a joint session of Congress, some reading false on one side and Musk steals on the other. I can't confirm the comedic or artistic quality of these signs, but the message is pretty clear. The political temperature in Washington, D.C. is hotter than a jalapeno in a sauna. Plus, there was that incident where Representative Al Green got booted from the chamber for interrupting Trump. If you're into reality TV, you might love this. If you're longing for something resembling normal governance, I'm sorry, 2025 apparently didn't get the memo. But wait, it gets even wilder. If you're an investor who thinks, but the Fed might cut rates soon, so it's all good, let me gently suggest you check the data. Yes, if a recession hits, interest rates might drop faster than a lead balloon. But that means the reason behind those cuts is a recession. Kind of a double-edged sword. Because while cheaper borrowing costs can be great if you're looking for a new mortgage or want to start a business, you might also be dealing with layoffs, higher unemployment, and a skittish consumer base that suddenly decides, maybe I won't buy that new TV after all. So the net effect can still be a giant question mark. You won't believe what happens next. Apparently, Trump is now floating the idea of a gold card for those who want to buy citizenship by investing millions of dollars in the U.S. economy. Some folks think this is genius, like, hey, get rich foreigners to boost our job market. Others say it's basically just pay to play, and do we really want to go down that road? Hard to say, but get ready for the next wave of arguments over whether that's a good plan or a scam to create more immigration friction. Because everything these days turns into an argument. Speaking of arguments, let's circle back to Tesla. The German market data is sobering, and the idea that owners might be worried about their cars getting keyed by political protesters? That sounds like a twisted scene from a dystopian novel. But hey, here we are. We've reached a point where brand loyalty could be overshadowed by brand baggage. And if you were counting on Tesla to keep climbing to the stratosphere unchallenged, that might be a rude awakening. Sure, they can weather a short-term slump, but if Europeans sour on the brand, that's a big deal. It's one of the world's biggest auto markets. All this ties into a broader concern, consumer sentiment. If people feel uncertain about their jobs, the global economy, or whether their car might be vandalized just for wearing a Tesla badge, they'll spend less. Once the top 10%, the folks responsible for 90% of spending, tighten their belts, the rest of the economy starts feeling it pretty fast. Then we're in a downward spiral. Lower spending, lower company profits, more layoffs, repeat until you're dizzy. But let's not forget that some folks will see this as an opportunity. Yes, in every meltdown scenario, there's always a group of contrarians who say, bring it on, cheaper stocks, cheaper business acquisitions. They might not be wrong. Historically, recessions have produced massive opportunities for long-term investors who have the courage and the liquidity to jump in when everyone else is panicking. The key is to distinguish between a buying opportunity and an outright dumpster fire. That's not easy, especially if the dumpster's on flames in the middle of a trade war. So, yeah, good luck. So, what's the bottom line? Let me guess. Thomas, are we doomed? Or what? Honestly, no one knows. If all these tariff threats scale back soon and if the job market holds up, we might squeak by with a mild slowdown. But if Trump is actually content with an engineered recession to tank inflation and retool the US dollar, brace yourselves. That strategy might benefit certain industries or lobbies in the long run, but in the short run, it'll be as fun as stepping on a thumbtack with your bare foot. Which begs the question, how do you invest or budget right now? Well, I'm not your financial advisor, but caution seems to be the mood of the day. Maybe keep some extra cash on hand. Maybe hold off on that big purchase until you see how the dust settles. Or maybe go hog wild and buy the dip if you think these clouds will clear by next Tuesday. Just know that if you bet wrong, you'll get front row seats on the Meltdown Express. All aboard. Anyway, that's your daily dose of cheerful economic news. Feel better? Didn't think so. But hey, that's what we do here. Serve up sarcasm with a side of market madness. Don't forget to smash that like button if you found this at all enlightening or even slightly entertaining. Subscribe to the comment section with Thomas Paul and drop a comment on how you think this entire fiasco will play out. Are we heading for a cunningly orchestrated recession, or is this all just media hype? Let me know. In the meantime, strap in, stay sarcastic, and I'll catch you in the next one. Good luck out there. You might need it.